Hello and welcome to another update video. We want to talk about the gold price in this video because the price is coming further down. We talked about that in the previous video already. Didn't need to do any relabeling. It's just following the waves at the moment. We start here on the weekly chart, just really to highlight to you again the overall Elliott wave count here of this chart. This is the gold futures chart, by the way. So the price might differ slightly from the gold spot market, but it will do, but only slightly. I count this here as a wave one, back in, this was 1980, 1979. Then we came down in a wave two of the higher level cycle here in 1999, moved up in a wave three. Wave three is oftentimes the longest wave. You can very clearly see that here. That was 2011, and then we came down in a wave four in 2016, and we are now in this fifth wave, which I believe is not yet complete. So let's zoom in into the fifth wave here, and just to quickly show you the different waves. We are always looking for 5 waves, so 5 waves will complete a cycle. And as you can see here, we've made our wave 1, the wave 2. This here is considered to be the wave 3. Now my view is we are in a wave 4, and the view would be there will be another wave 5 rally afterwards that could take us into the region around $2,500, $2,600, maybe a little bit more. Okay. But the point is that we are now at a point where we must not drop a little bit, we must not drop much further. So if we look at this in terms of, okay, this was the wave 3 and this is the wave 4, in quite a complex corrective pattern, to be honest, that wave 4 is, then you would normally say that a wave 4 must not drop below the 50% fib level. This is at $1,608. Now, I wouldn't be worried if we come down maybe to $1,590, $1,580, but it's only for a day or so, and then we recover, not a problem. But if we go below that level, so below the 50% fib level, let's call it the $1,600 level. Let's say we get below that level and we hold there, and we stay there. Then we've got a problem, because then in that scenario, it's most likely not a wave 4 anymore. And then the next likely pattern for me would then be that we say, all right, the wave 5 was actually finished here. The wave 4 was already done in 2021, and that the wave 5 here was basically finishing the higher level cycle of. Now that creates a problem in that what then would come down would be a wave 2. Yeah, because this wave 5 would finish off an even larger degree wave 1. Wave 1. Yeah, of the, let's say, the higher degree, right? So it is basically of a very large cycle, the completion of a very large cycle here finished, if we get below $1,600 and stay there. And that means we could even see a 3-digit gold price. Now, that is something I don't find very likely, but the closer we get to that level, the more likely it gets, obviously. Yeah. So this is just something we need to be aware of. There is no confirmed bottom in place yet for gold. So, but this is at the moment, this is not my primary expectation, right? That we will come down that far. My primary expectation is that we are going to reverse in this yellow target area, reversal area, in which we now came already. Well, we've come into it now for the 3rd time. We touched it here, reversed. Price didn't use its bullish potential as we've made a lower low afterwards. Here, reversed, but remember that we were skeptical about this. We only saw 3 waves, and then in the last video I showed you that this looks like a 5-wave impulse to the downside. We were just creating our 4th wave there, and I think directly after the video then we came down strongly. So this looks to me like an Elliott wave triangle, and that we are now in the 5th wave down. That's how I see this. And this is overall, yeah, from the most recent high in the beginning of the year. This, I consider this a wave Z, yeah, in a very complex correction, and the Z wave consists of a WX, YX, Z itself. And the Z wave here, the last one in which we are, is basically an ABC. And we're now in the C wave. So we should be sort of towards the end of this cycle. It's a very complex correction. No surprise really, given the conditions in the world and the situation in the world, but this could really be that we are now in the 5th wave of the 5th, and or the 5th wave of the Z wave basically, and that this is going to be at the end of the correction. And ideally, you know, I'm looking at that second 1608 level. Maybe we reach it and reverse from there. But all we need to do really is to get below this low. That would be ideal, below the 1622 level. Now we don't technically need to do that. We already have 5 waves here, but the most likely outcome would be to get below that level. If we don't, then it would be a so-called truncated wave, which is never ideal, but it works. We would then naturally expect a strong move afterwards. If you see a truncated wave, like a double bottom, or we don't even get down to that 1622 low, then it would be a so-called truncated low. Not very likely, but it does happen, especially if there is a lot of upside pressure. Now at the moment the trend seems to be further to the downside, and I'm looking at ideally reaching that 1607, 1608 level, but then to reverse, because this is really where it needs to reverse. Now, as I said, no worries if it drops down a bit lower, you know, not a major problem. But if we come down much further, and if we're not reclaiming that 1608 level, then we do have a bit of a problem. Yeah. So at the moment, my view would be, you know, what would be the first reversal signal to the upside? It would be that the wave 4 high gets broken. So the first small signal that we are reversing back to the upside and could have seen the bottom would be a move above the wave 4 high at 1689. Yeah, that would be a really good signal, a break above that level, and then consequently also a break above 1738. That would be the next major signal that would help us to understand if the trend is reversing, right? So that's where we are really. We're pulling really deep into support, all we are doing at the moment is just fulfilling the higher level pattern. If you remember, we talked about already in January or February about these current prices here, that we are going to see the price to get into this area between 1608 and I think it was 1680 at the time we talked about. So between this range, and we are there, you know. So again, the Elliott waves helped us to establish that, to understand that the previous trend was getting exhausted, and that this move up here, which took us to above $2,000, was really only a corrective move to the upside, which would eventually be followed by this strong sell-off, which we're seeing now. So all we need to do now is to finish off the correction and then to reverse ideally. If we don't, again, we get into this scenario where we'll see much lower prices for gold, which I don't really want to see. Yeah, it would just mean a much longer bear market, a much longer correction. And I only see this if generally we also see a very strong stock market correction still. Cryptos are going to drop down much more, but a lot of the markets are already sort of, you know, close to bottoming out, I believe, and oversold. I mean, if we look at the daily chart here, yeah, I mean, this can go down a bit further still. Yeah, you see the RSI is not oversold on the gold price chart, and the MACD is just creating a bearish crossover. So it doesn't indicate that this is over yet, but we also still have a bit of space to the downside. But we already touched here the oversold range twice in recent months. Here on the 4-day chart, the weekly was nearly there in the oversold range. We have come down quite a bit, right? We have come down quite a bit. So what we now need to see, as we haven't seen a confirmed bottom yet, we are waiting for signals now, and at the moment I cannot see a signal that this downtrend is stopping. We can also, I don't know if that trend line is going to help us. It will. Yeah, we're basically in a channel, as you can see. We've got 3 touch points there, maybe even 4 if I extend that a bit further. 4 touch points, and if you draw a parallel line down there, you can see we are nicely in the channel. A drop out of the channel either way would also accelerate the trend, obviously, into that direction in which it will break out. So ideally, breakout to the upside would be a good signal that we are already moving up. So far, we have not been able in this whole downtrend to break out of the channel. Okay, and that's my update about gold. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then also check out my main channel, More Crypto Online. Thanks a lot for watching. Bye-bye.